Good morning, everyone. Thank you for joining us this morning. I am Willie Reyes, BusinessWorld's Editor-in-Chief. The Asian Development Bank yesterday released its Asian Development Outlook, or ADO, for this year. And there it cited signs of a rebound in growth, but with the virus, and I quote, far from being beaten. Key messages for the Philippines in that report were, one, the Philippine economy is on the road to recovery. It will grow slightly faster than ASEAN's average, but still below government targets. Number two, the Philippine economy will get back to trend growth in 2023 yet, and growth from there on will be sustained by infrastructure spending and the impact of recent tax reforms. And finally, third, and this one I found most worrisome, even then, damage to the labor market has been so extensive and so deep and continues that, to quote ADB's Philippine Country Director, Dr. Kelly Bird, yesterday, there will be persistent negative rate in employment even as economic growth picks up. Well, today we are privileged to have with us ADB's Chief Economist, Dr. Yasuyuki Sawada, who will discuss the wider arena in which the Philippines is situated. Good morning, Dr. Sawada.
Good morning, Willie. Thank you very much for having me. Magandang umaga.
Magandang umaga. Now, just for our viewers' appreciation, Dr. Sawada, or Yasu, has a lot of development research fields he's been involved in the past. And these include disaster resilience and recovery, as well as health in Asia and in developing economies elsewhere. So quite relevant to our times and to our discussion today. Well, perhaps, Yasu, we can start with what has changed in the economic landscape since the last ADO supplement that you released in December, even as the world continues to struggle with the virus. Let's start with that.
Yes, I think, thank you very much for this very important question. What's the update since we released Asian Development Outlook forecast in December last year? I think arrival of effective vaccine, this has been changing the economic landscape and growth and inflation prospects. Basically, Asia has administered on average 5.2 doses per 100 people. So slowly rolling out of vaccine progressing, and although 5.2 doses per 100 population is still below the global average of 7.7 per 100 people. In any case, developing Asia, after all, contracted by only 0.2%, minus 0.2% last year, as opposed to our December forecast, minus 0.4%. So this slight upgrading of last year's economic growth can be a major portion can be attributed to a good scope for rolling out of vaccines. And also, especially in East Asia and some Southeast Asian countries, manufacturing production quite strongly returned back, and also export has been really recovering, especially China, Korea, Taipei, China, and also Vietnam. So these, real sector production export is a driving force. Why we updated minus 0.4% growth forecast in December to minus 0.2% growth. So that's the major changing elements of economic landscape.
Yes. Well, let me quote from the report, which says that growth in 2021 is forecast to be strongest in East and South Asia, and more moderate in Central and Southeast Asia and the Pacific. ASEAN used to show relatively stronger performance previously. Would you know what happened? What happened this time? Why is it more moderate?
Yes, East Asia, probably stronger bounce back of growth can be attributed to, as I mentioned, exports and also production returning back. South Asia actually encountered a deep recession last year. So starting from a low GDP base last year and a moderate return, naturally growth rate becomes higher. But this higher growth never compatible with returning back of GDP level, returning back pre-COVID situation. So I think South Asia high growth can be attributed to deep recession, reflection of a deep recession last year. So Southeast Asia is located in the middle. The recession last year was milder, but at the same time, including the Philippines, still struggling with controlling the pandemic. So that's why overall Southeast Asia growth rate is slower than South Asia. But that also indicates recession has been relatively handled well if we compare with the South Asia economies.
Well, governments have been warned about long-term scarring in this pandemic that will weigh on growth prospects in years to come. Your report zeroes in on disruptions in education and employment. How long do you expect this damage to linger on growth prospects? And frankly, what strategies can government adopt to counter them?
Yes, a long-term scarring of the pandemic, that's a very, very critical point government should carefully tackle. And actually, there are a few factors we need to really, or government needs to really put extra care. First one is affected economies, productive capacity was really adversely affected by the pandemic, especially public and private investment have declined quite sizable level and undermining healthy capital accumulation. And most of the large Asian economies, including the Philippines, main source of growth is domestic consumption and investment, as well as external export. So I think the pandemic really affected public and private investment. That's the one issue, and how to stimulate investment further, and also how to recover investors' confidence. That's very important. And another area is as you mentioned, human capital. Because of the prolonged unemployment, which can cause workers losing skills or drop out of the labor force, and also younger age group, learning losses from school closure will affect the future productivity. Actually, according to our study included in this report, on average, school closure causing $180 annual income decline of future workforce now learning at school, because combating face-to-face conventional modality of education to switch to online education, lack of a computer without internet access, this is really imperfect substitute. So according to our study, after all, this will cause $180 on average annual income losses. And another dimension is I think all the recoveries, many people and governments really recognize recovery should be more green and also inclusive. So how to achieve a building back greener, and how to achieve a building back more inclusive? I think there is resources needed. Again, in our report, we mentioned 1.5 trillion US dollars. That scale of investment is needed to make recovery climate resilient and also inclusive. But the lack of public resources to finance 100%, 1.5 trillion US dollars, I think tapping a private finance is quite important. So in this report also we mentioned the role of green finance and social finance, how to mobilize private resources in order to achieve a robust recovery. So I think that these are the important elements, and the speed and the pace of investment recovery as well as the human capital recovery. I think it depends on the country's progress of containing pandemic, and also country-specific elements play a key role. But anyway, these three elements I would say, very critical.
So green financing will be one key way of addressing the current difficulties. I think that's something that's a topic that's good for an entire webinar, but we'll get to that a little bit later. But clearly, the emerging picture is that of divergent recovery paths, K-shaped, unequal recoveries among sectors within individual economies, as well as wider gaps in living standards between and within economies. So can you just give us an idea of how far back have poverty reduction gains of past years, how far back have these been pushed, and what can be done to somehow mitigate this widening income gap, which has been a constant problem in this region?
Yes, if we track poverty reduction trend in last 2-3 decades, Asia and Pacific region, including the Philippines, we have seen continuous decline in number and proportion of poverty. Usually, SDG and UN agency, including World Bank and also ADB, use the $1.9 per day per person per day as an extreme poverty line, and also $3.2 per person per day as a moderate poverty line, and count the number of people below these poverty lines and the proportion of people out of the total population. And if we use these conventional measures, Asia has been really progressing to decrease dramatically, actually, proportion poor. But gains in this poverty reduction in developing Asia were significantly pushed back in last 2 years, last year and this year. And in the report, we mentioned, according to our analysis, additional 78 million people falling below this extreme poverty line, 1.9 poverty line, and additional 182 people getting below $3.2 per day poverty line. So I think there is a substantial number of people falling below poverty line because of the pandemic. I think a policy to support the recovery should really target well, because the limitation of social transfer budget. I think fine targeting of limited resources for cash transfer program or in-kind food transfer program, that's really necessary. And also, targeting poor barangays in the Philippines, that's very important. And also within, even within the barangay, I think targeting vulnerable people and vulnerable group, that's very, very important. And one thing I would like to mention related to ADB is last year, April and May, ADB supported Philippine government's Bayan program, food transfer program in Metro Manila. It's a $5 million US grant operation, so relatively small scale, but we supported the food transfer. But the challenge is, after imposing lockdown, the government swiftly mobilized food transfer. In order to do that, the government really needs detailed poverty mapping, which barangay should be prioritized than others. And actually, ADB, my research department, constructed a verifying poverty map using a satellite imagery, daylight satellite imagery and night satellite imagery. So using that verifying poverty map, we could support government priority listing of a barangay. So I think high technology or a new type of data can also help define the social sector protection program. So. But in any case, I think poverty increased a lot. So targeted approach is really needed, and with the innovative data set.
Yeah, poverty reduction is really the bottom line for any developing economy. Is there any model that you can, is there any model country or economy that you can point out when it comes to poverty reduction and the use of a better targeted poverty strategy?
So direct transfer program, that's one very important means to reduce poverty. But the other is to create more sustainable, decent jobs for those who are affected. So I think job creation is another. So government investment support to revive private sector that play a key role. And one issue or one sector I would think which is a key is digitalization or digital platform economy. Because of the pandemic, like us, online meeting and also online education, online business, food delivery, etc. Now, and also work from home arrangement. Many our daily activity is shifted through the online platform. So I think if online platform is carefully made so that platform can include poor workers, I think that's a very important. So in other words, online platform has really potential huge gain. According to our study, 1.7 trillion US dollars, that size of a new benefit can be generated by expansion of digitalization. And also 65 million new jobs can be created by online, expansion of online economy. But these new jobs should be inclusive. Not only highly educated workers, but also less skilled, less educated workers can be included. And I think in order to do that, tackling a digital divide, micro enterprises can also fully utilize online platform, and also unskilled workers can also fully utilize, for example, as delivery workers. I think that's a very important, carefully tackling a digital divide. So competition policy would play a key role, and also making online infrastructure, ICT infrastructure accessible to the poor people and affordable. I think that's a really key.
Okay. Well, let's for now go momentarily to another type of risk that came with this pandemic. Something people have been speculating on is a possible replay of the 2013 taper tantrum, especially after the US last month passed a massive stimulus program, something like $1.9 trillion to speed up economic recovery. In fact, this sentiment may have been partly responsible for capital outflows from emerging markets last month. How big is this risk right now? And are there economies, particularly in Southeast Asia, that are vulnerable to such an event?
Yeah, thank you very much. This is a very important concern at this moment. US long-term rate rose in Q1 earlier this year, but mainly due to a stimulus-led US recovery, and bond yield spreads widened in March. So some Asian currency depreciated because of this, US economic performance. But I think after all, Fed remains dovish despite of this strength of recovery in the US economy. I think the risk of a taper tantrum repeat is manageable, I think this time. Also, yesterday's FOMC meeting statement really endorsed Fed remains dovish. And I think after all, although we see US long-term rates rose in Q1, but Treasury bond yields still low, below 2%, and near historical lows. And as indicated, Fed seems to be dovish. And also another element is external conditions, Asia. Unlike 2017, capital flows are milder, outflow inflows are much milder, and stronger current accounts of Asian economies, and also exchange rate, when it comes to the exchange rate, less appreciated against the US dollars. So I think overall element considering together, risk of taper tantrum repeat which is non-zero, but I think it's manageable. And I believe Fed will be really careful communicating with the market in advance if they're gonna change the situation of monetary policy.
Yeah, so the risk is there, but Asian economies are on the whole, especially in Southeast Asia, we are better positioned to be able to meet that risk. Yeah, that's what I'm getting from you.
Yes.
Well, one tool many central banks have employed in this crisis is injection of liquidity to support their pandemic response. And so right now, there are concerns on the timing and pace at which these measures will be rolled back. What would you say would be an orderly way of unwinding quantitative easing and other special measures that were taken during this crisis?
I think this is not necessarily an issue right now yet, because inflation is not really a threat in most economies. In few areas where inflation pressures are concerned, including the US with a very large scale of stimulus this year, and also supply bottlenecks we observe in semiconductor industry, plus some transport and freight cost increase. I think there are some pressure of upbeat pressure of inflation, but these elements seems to be temporary, not permanent. And also, even if we take a scenario that unwinding will happen, I believe most critical element is proper communication. I mentioned. I think Fed will be really well communicated, learning from the past experience, and so I believe there will be no surprise for misunderstandings, and the international coordination will be well made. So I think overall risk of QE unwinding generate an additional shock to the Asian economy. I think that scenario is the chance of that scenario is quite slim at this stage.
One key government response to the pandemic has been stimulus for affected businesses, particularly the micro and small enterprises, and also vulnerable sectors like the poor. But then, of course, this faces fiscal constraints, and understandably, many governments may also be cautious on how any imbalance may affect their credit ratings and therefore make it more costly to borrow later on. But at the same time, weaker economic performance makes fiscal and debt consolidation much more difficult. So like earlier this week, Fitch Ratings released a report, and in its Philippine section, it cautioned about any sustained rise in state debt to GDP ratio and failure to resume historically high growth rates. It feels like we are walking a tightrope. What are your thoughts on this delicate balance?
Yeah, I think this fiscal balance issues and concern for fiscal sustainability, I think this is really a critical issue. I'd like to mention, first of all, before pandemic, in last probably 2 decades after the Asian financial crisis, many developing Asian economies, including the Philippines, have been fiscally quite prudent. So public debt GDP ratio has been really well managed. So that was the situation just before pandemic. And I think this starting from this situation, allowing government to respond decisively to the pandemic. And I believe that was really appropriate and needed. Without such a massive response, economic and social toll would have been much worse. So I think this was a really indispensable fiscal measures undertaken by governments, including the Philippines. If weakness persists, fiscal support should continue, I think, to support again economy and whole society. I think many economies in the region will still have a space to continue expansionary policy position. And it will be more costly. And I believe this is less costly than without, continuing support socially. So I think this is a very important point.
Okay, so let's, this is the time we go back to, let's go to green financing. The theme actually of this year's ADO, this year's report, is financing a green and inclusive recovery. So the Philippines itself has lately seen more companies participating in this field. You have big companies, you have the likes of Aboitiz, AC Energy, four big banks, BPI, BPO, China Bank, RCBC. Can you give us an idea of prospects in this field in terms of appetite? Is such appetite growing even before the pandemic? Or did the current crisis in any way also stoke appetite? But also, what remains to be done to support growth of green financing if this will be a key response to better recovery down the line?
Yes, I think I already mentioned green and inclusive recovery needs quite large scale of resources. And according to UNESCAP study, Asia needs to invest 1.5 trillion annually, or 4% of regional GDP, to achieve SDG by 2020. That is really resources needed to achieve green and greener and more inclusive recovery. 1.5 trillion US dollars government cannot support fully. Naturally, we need to tap private resources. And actually, the rapid growth of sustainable finance, green finance, and inclusive finance, this is, we already see this massive expansion, even during COVID-19, after the outbreak of COVID-19. This is partly driven by very strong investors' appetite. 30 trillion, or one third of the all investment managed globally, is now guided by ESG objectives and principle, environment, social, and governance principle. So I think there is some major shift of investors' preference. So I think that's really behind. And I think there is a way to mobilize further private resources to bridge the gap of financing greener and inclusive recovery. So government can play a key role to help develop this market infrastructure and market ecosystem. And very important point is common standards is needed. Setting a common standard, enforcing this standard in the area of information disclosure and also impact measurement. So these are the very important elements. So government definitely play a key role to set the regulatory framework to setting up and expand the market ecosystem. So private and public together, I think that's a key to nurture better financing of green and inclusive recovery.
Okay, let's zoom out a bit and let's go to another field. There are those who say that the pandemic has provided a stage to observe and compare policy making. Do you share this view, Yasu? Are there indications, for instance, that investors have been taking pandemic responses and their results as a kind of a proxy for the general quality of policy and decision making? And this allows them to compare economies?
Yeah, that's a very intriguing question and very important question. I think we should aware pandemic has had no real precedent. So this is the first time all policymakers are learning what should be done, and things developed over time quite rapidly. So policymakers and governments should, quickly respond and also cope with unforeseen contingencies. So it does no good to cast a blame or claim we could have done better ourselves. I think, for example, one can hardly fault policymakers in tourism-dependent economies if they experience double-digit contractions last year. So I think it's better to focus, more forward-looking manner and constructive manner country can learn, daily each other's experiences and also support each other. So it's like a learning by doing process and a mutual learning and social learning process. So it's not necessarily a good idea to, viewing, evaluating quality of policy making by seeing, wide variety of, interventions and programs. So I think I would respond in that way.
Okay. Let me just ask, field these two questions from readers. Number one, aside from manufacturing, what other industries are recovering this year or expected to recover in next year in 2022?
Yes, I think overall, initial stage of a pandemic, we see a sign of a recovery in medical equipment industry, especially in East Asia and China. And then after that, probably related with more, online modality of a daily life. Later last year, we saw a strong recovery of electronic products, production and also exports. I think looking forward, again, it depends on the progress of containment and also vaccine rollout. Each country started gradually or in fine-tuned manner reopening its economy, and whole our daily life is at different pace and different speed. Getting back to the normal pre-COVID-19 normal. So I think a wide variety of service sectors will be returned back. And I think not only manufacturing sector, but also service sector, we can expect to recover strongly. But also, as we continue our daily life, agriculture sector should be protected and supported in order to feed whole population. So I think now we see a strong bounce back in manufacturing sector, but the service sector as well as agriculture sector would recover strongly. As again, it depends on the speed of containment policy and vaccine rollout. So that's the prospect for economic recovery.
Second question, on our end here in the Philippines, what critical developments will help spur a green recovery? Also, what next steps does ADB suggest to follow up the Philippines' recent initiatives in the transition to renewable energy?
That's a very important question. I think green recovery, both mitigation and adaptation, we need to invest in renewable energy and also resilient infrastructure. So alongside with, aligned with this build government project, I think continuing high quality infrastructure, that's quite critical in both mitigation adaptation. So ADB has been helping. One example is like large scale transport project, railway and subway projects. That's a really make whole society and urban mobility more climate friendly. So I think basic infrastructure and also energy and transport sector investment, that's a key to support both green recovery and also strong recovery. And ADB has been supporting infrastructure project and programs in the Philippines. Yes.
Let me just add this one because we talked about renewable energy. How about nuclear energy? There's a move now within the government to at least study the revival of nuclear energy development in the Philippines. What do you think of that?
Yeah, that's a very important area, nuclear energy, how to include energy generated by nuclear power plant as a part of a energy mix. I think it's up to the government, and also it's up to the Philippine people how they consider nuclear safety and also sustainability, and also clean future of nuclear power. So I think it's up to government and people of the Philippines to decide. I would say.
Thank you, Yasu. More questions. Understandably, the pandemic has negatively affected all countries worldwide. Is there a unique impact on the Philippines? Is there any particular way that the Philippines has been affected, in a unique way, do you think?
So Philippine, one unique feature of Philippine economy is a sizable number of overseas Filipino workers, OFWs. So I think one big concern at the very beginning of pandemic was how remittances and also work environment and working situation of OFWs adversely affected. So I think that this is quite unique to the Philippines. Although in other migrants-dependent economy in Central Asia and South Asia have a similar concern. So World Bank actually at the very beginning of the pandemic made estimation probably remittance inflow will be cut by 20%. However, after all, that major drop in remittances didn't materialize. And actually, overall, developing Asia, we saw a 0.7% slight increase overall year-on-year level remittance flow. So there are many reasons behind. Maybe basically remittance driven by pro-cyclicality and altruism. So senders seeing that the pandemic and the families, extended families in a home country affected negatively, they tended to send more. And also because they cannot coming back physically, so instead of bringing some pansalubong, they can send out cash. And for some Muslim countries, people cannot go to Mecca for Haji. So instead of going to Haji, they rather spend money to remit money to home country for home families. And also Pakistan and a few countries had some tax incentive to increase and stimulate and continue remittances. So all of that, after all, we observe a slight increase in remittance. So this, adverse impact on OFW and remittance are very, very unique. I would say very unique or very important component of COVID-19 response. And after all, we don't see. First half of last year, we saw a big drop according to BSP statistics. But the second half of last year, we had a quite strong recovery of remittance inflow from OFW into Philippines. So I thought this is one unique feature of a pandemic response of the Philippines.
Thank you, Yasu. From another viewer, from Kat Abad, Mr. Sawada, what is your observation on foreign investments here in the Philippines, considering that there's still a pandemic?
Yes, I think some of the medium-term view, I think FDI inflow into the Philippines, if we compare with other countries like Thailand or Vietnam, FDI inflow has been relatively slow. There are multiple reasons. Maybe tax, corporate tax. Now, because of the tax reform, this problem has been really mitigated. But high corporate tax rate seems to be a binding constraint, and also lack of a proper infrastructure seems to be also another constraint. So in spite of this young population, English speaking, and the capable workforce, high quality people as a worker in the Philippines. But somehow, if we compare with other ASEAN countries, FDI inflow seems to be slower. But I think COVID-19 can make crisis, but also this is a momentum to take this opportunity for reform. So government can continue infrastructure investment to improve FDI investment ecosystem, and also tax reform has been progressing. So I would think Philippines will have a very big potential with this very, very rich human capital. I think Philippine economy has a very good, very rich potential to seize this crisis, transform into opportunity for robust recovery.
I have another question from a viewer with regards the issues on education and unemployment. How much could the digital divide affect the future generation of workers? How will the continued emphasis on online platforms affect the most vulnerable sectors of society who don't have access to the internet?
Yes, I think digital infrastructure, I think making internet affordable is very important and stable. And also not only internet, but also hardware, computer or iPad. So these materials, gadgets should be available. And actually, we did a study in this report. We did a study 1 year or last 1 year's education. How many portion has been lost? And according to our study, around 30% of effective learning day has been lost in last 1 year due to a switch from usual face-to-face classroom to online modality, and that can be attributed to lack of a computer and lack of affordable, effective internet access. I think that this is a really very serious indication of a digital divide already happening in last 1 year in Asian countries, including the Philippines. Debate, in order to tackle, because internet access and computer access cannot be done overnight. So debate started adopting this blended learning method, not only internet-based, but also fetching materials from the school weekly, and then paper and pencil, working on homework assignment and materials, as well as TV and radio-based learning. So combining this blended learning, I think that's the one hybrid way and effective hybrid method to tackle and mitigate digital divide is happening. But having said this, over time, investment in ICT infrastructure is necessary, and also making services affordable. That's really critical in medium term to remove risk of digital divide.
Okay, we have another question from Pitt. Mr. Sawada, with the announcement of the withdrawal of a major US bank in various emerging markets in Asia, I suppose it's Citi, on consumer banking, is this a direction you would see with other US banks?
This is a good question, but I'm aware because I had a US bank account here in the Philippines. But I think this is not really a common trend among the major US banks. Rather than some individual, this US bank, because of changing president and corporate strategy changed. So I think I would take this as a more idiosyncratic decision rather than some major trend in the region.
Let me go to this. This year in 2022, we'll see elections in at least 5 major Asian countries. It's India, Laos, Malaysia, Vietnam, the Philippines. I don't know if there are others. Will those exercises be boon or bane for economies that are still struggling to get the virus under control? What would be your concerns here?
Yes, I really hope elections do not prove to be a distraction for policymakers. And I do believe governments will remain focused on containing the pandemic, regardless of changing administration. And elections could even lead to a very useful public debate, how this crisis can be addressed and tackled. So I think election, I do believe government won't change a basic, policy priority to handle pandemic, and also including vaccine rollouts, and also even election can give a better sort of a political competition, so that we can have a better policy intervention programs and commitment. So I do think this is a really good opportunity. Again, a crisis or changes can be turned into the opportunity for reform. I think that's the cutting I would consider.
Okay, let's just do a bit of a recap. You know, past economic crisis, they yielded a wealth of reform lessons, for instance, in terms of regulation of to further fortify the financial sector. Are there key policy lessons that you see emerging from this global crisis? And are there models out there that we can study?
Yes, I think nature of this crisis has pointed out weakness in healthcare system, including public health and pandemic preparedness nationally as well as globally. One example is in health arena. One example is universal health coverage. Universal health coverage, actually Japan and Korea and a few Asian countries already achieved this UHC. This is a government program basically supporting a fair and universal access to quality health services. This is a really important element. And Israel is a front runner of vaccine rollout, and Israel also has a universal health coverage system. So I think this is a very good lesson, policy lesson we can learn. Although USC cannot be established overnight, but medium term, putting effort towards the achieving a USC system is very important. So this is number one. And the social safety net arena, I think it became apparent there are holes in social safety nets and government programs. So I think with this, government can learn a lot how to swiftly identify poor, and also how to rapidly deliver necessary cash transfers or in-kind transfers. And lastly, but not least, policymakers should address digital divide again. I would imagine that may even become more important after seeing this rapid digitalization of the economy facilitated by the pandemic. So I think healthcare system, social safety net, and digital divide, policy lessons we can learn a lot.
Thank you, Yasu. Perhaps let me just ask this. This will be the last question. The Asian Development Outlook has updates. We'll have updates in July, September, and December. What factors will you be watching that could change the picture later this year? And more importantly, what do you hope to see, particularly in terms of improvements in government policies?
Yes, thank you very much. So next time we will update July and then September, December. So we will keep monitoring different aspects of each developing economies in Asia and Pacific, including the Philippines. I think we will monitor closely at this stage the resurgence of COVID-19, recurrent waves of COVID-19. I think that's really important. And also a pace of vaccine rollouts. I think these are two downside risks we need to really closely and accurately monitor, and then incorporating our forecast updates. Another area is we're going to keep close eye on the relationship between the US and PRC on not only on trade, but also technology fronts. I think that will affect the Asian economy quite substantially. So these two areas we will keep close eye on, and then we will fine-tune our growth forecast in July, September, and December.
Yes, let me just insert this. I just recalled seeing a graph in the ADO that showed generally the Asia will go back to the Asian GDP levels will go back to 2019 levels only after 2022 or 2023.
Right. It may take some time to going back. Also, China, it seems China can return back to a pre-COVID-19 trend in year 2022. But besides China, I think whole developing Asia, it may take some time. Our focus horizon is 2 years, this year and next year. So within this 2 years of focus horizon, we don't envision whole Asia, excluding China, will return back to pre-COVID-19 trend. So it would take more time and later than 2022.
Thank you, Doctor. Thank you for joining us today. It's been a privilege.
Thank you very much, Willie, for asking a very important questions. And also thank you very much for viewers and participants for asking me very important questions. Thank you very much.
Here we end our interview with ADB's Chief Economist, Dr. Yasuyuki Sawada. We thank our partner organizations, the Management Association of the Philippines and Asia Society, as well as our media partner and our parent publication, the Philippine Star. We thank our viewers for joining us today. Have a good day ahead.
Thank you.